Hey everyone, welcome back. Today, we're diving into an interesting topic that might surprise some of you, the possible end of the personal check. And you might be wondering, are personal checks really on their way out? Well, it looks like that's the direction we're heading, and it's got quite a few implications for our daily lives. Think about the last time you wrote a check. For many of us, it's been a while. Only 15% of adults wrote a few checks a month in 2023, while a staggering 46% didn't write a single check all year. This shift towards digital and contactless payments has been accelerated by the pandemic, and now, major retailers like Target, Aldi, and Whole Foods are no longer accepting personal checks at checkout. So, why is this happening? Well, one big reason is security. Checks are inherently insecure because they contain your bank details. Handing over a check is like sharing a screenshot of your bank account. With advances in digital security, retailers and consumers alike are finding contactless and digital payments to be safer and more convenient. You might be wondering, who still uses checks anyway? In 2024, check writers are typically older and less integrated into the digital banking community. Americans over 55 are the most likely to write checks each month. This wasn't always the case, though. Checks have been around since the 11th century, but only became mainstream in the early 20th century. It wasn't until after World War II that checking accounts became common among middle-class households, making checks the most widely used non-cash payment method in the US. Checks continued to dominate until the mid-1990s, but since 2000, their use has plummeted by nearly 75%. Despite this rapid decline, a form of payment with such a long history isn't likely to disappear overnight. Checks might still linger for high-value transactions, like charitable donations or real estate deals, where their tangible nature and the perceived security of paper can be comforting. But let's talk about the younger generation. Today's young adults are increasingly bypassing traditional banking and credit systems in favor of peer-to-peer payment apps like Venmo, Apple Pay, and Zelle. These apps have essentially become de facto bank accounts, even though they aren't FDIC insured like traditional banks or credit unions. Many young people don't carry cash, and it's likely that few even know how to write a check. So then, what does this mean for us? As the use of checks continues to decline, we need to be aware of how to adapt. For everyday transactions, we can rely on digital payments, which are often faster, more secure, and more convenient. However, for those rare occasions when a check is still required, it's good to know how to write one and understand its place in our financial toolkit. Now, I'm curious, how do you feel about the decline of personal checks? Have you already transitioned fully to digital payments, or do you still find occasions where checks are necessary? Let me know in the comments below. And remember, the financial landscape is always evolving. Staying informed and adaptable is key.